Resources to the easy stuff that's developing in the background. Trying to find the difficult stuff and trade the difficult stuff is going to make our life as traders, well, surprisingly enough, difficult. And that's obviously going to be disheartening at times. Sometimes you're going to be looking at it going, I just never seem to get the good stuff. I never seem to get the easy stuff. And an awful lot of that's down to the time of the day that most retail traders actually start, and that is at bollocks o'clock, when when nobody else is trading, but you guys seem to love coming in at those times to try and pick up some rubbish. So, you know, when it hits bollocks o'clock, what the hell are we supposed to try and do with that? You know what I mean? The easy stuff is usually when the big trades are taking place, which usually is quite standard across the days. Every day of the week we have the same standards, big stuff happening. The pre-market London, the London Open, the US market open, the US market close, the big areas, the big volumes, the big areas where a lot of retail traders simply just don't tread. Instead, they'll like to turn up at 11 o'clock because it's their lifestyle choice to not be a full-time trader, because that's why they got into trading, because it's a lifestyle. And what a load of bollocks. Trading's not a lifestyle, it's a career, it's a business, it's a real serious business that you want to try and take advantage of. No wonder people's lifestyles generally suffer when they become traders, because they run out of money. So when we try and find the good stuff, we try and make sure that we find the good stuff at the best times of the day. We find the good stuff at the best times of the day. And, you know, when we find the best times of the day to trade, we can still trade as a lifestyle business, so long as we still trade the best times. The RGLs are a great example of a lifestyle type trade, whereby we don't have to dedicate a whole day to trading, but we have to make sure we're available for the big trades when they're setting up. And that's a commitment that still a lot of people, in fact, most people here simply for whatever bizarre reason, simply don't seem to think is worthwhile making millions of dollars. But hey, we have tried. So trying to find the easy stuff. You can see how nice this buy trend, by the way, in gold's developed. You can see it exhausted into the lows again here. We started to find buyers at higher prices, exhaustion prints, and you can see how nice and easy that buy trend is away from that level. Do you see how beautiful that is? I can't make it up, guys. It's on the right-hand edge, and it was a class we did before that buy trend developed away from these areas. Is that not straightforward and easy? Is that not straightforward and easy? So when we see that happening, we can start to really kind of use these simple elements of price action. There are no sellers. Why the hell would I not want to be a buyer when there's no sellers? Seems to be the most logical thing as an auction trader you could ever imagine. If there's no sellers, it's asymmetrical buy side, surely to goodness. Well, these little blue dashes mean that there are no sellers, and therefore the price then goes buy side and rotates back away from here. We've just seen a bit of an exhaustion print here, so what do you do when that exhaustion print happens? You start booking some of your lovelies into that little phase there and say thank you. Let's see what happens next. You can see there has been a lack of buying coming in since this delta peaked in this candle here, and you can see there's been no buying since then, and that's what we've got, that little exhaustion right just there. Doesn't mean there's going to be sellers at lower prices, but at the moment there is no buyers at higher prices. Well, we don't need these indicators to tell us that. We can see it from the delta itself. The delta itself gives us the idea that there's no sellers to worry about down in these areas here. And when we do get sellers, we're using them as leans, because obviously these ideas simply tie in perfectly with the concept of block leans at lower prices. When there's no sellers into lower prices, the better trade is to try and be a buyer. Pretty straightforward, pretty easy, pretty obvious, pretty successful most of the time, right? So when we start to recognize the obvious, when we start to recognize the good stuff, we don't have to waste time on the rubbish. We try and tie these fantastic elements of benchmarks from all the various different disciplines, the order flow side of business, the technical side of business, the time of day side of business, the volume side of business, the value side of business. We try and tie those together to make a coherent, tradable, executable, and relatable scenario. Because relatable in as much as you can tell us all about it by highlighting it from chart after chart after chart, regardless of whether it's an order flow or a volume or a value chart that you're looking at, you can still highlight it from that narrative and show why it was a perfect trade outcome. And obviously inside of those elements, you start saying to yourself, well, why don't I just always wait for the good stuff? Why don't I just wait for the good stuff? Why am I trading all the draws? Exactly. What a great question to try and answer, right? Why is it that you find it's almost impossible just to be patient enough to wait for the great stuff to show up and then execute? When you answer that question, suddenly the breakthrough perhaps happens. You suddenly think to yourself, no, you know what? I can stand on the sidelines and wait. I'm in no hurry to do anything here. I can simply wait this one out and see what happens. Waiting for the great stuff means tying in things like order flow with the delta, order flow with the value and the delta, order flow with the value, the delta and the levels, order flow with the value, the delta and the levels, and anything else that we might be coming in, another value line, a second value line, a third value line, whatever. Strong stories, good order flow, great volumes, great strategies, results in some great easy money trades. Makes trading very, very sexy, very easy to do. And again, this is where it can become a lifestyle business. This is where it can become a lifestyle business, because you don't have to spend your whole day at the screens to be able to accomplish something interesting. If you had bought, for example, this bottom edge gold, and you've just been buying some of this 38.5s, it's just traded 43.5s. You've just made $500 off of that easy money buy. $500 per contract. If you've got yourself up to, say, a 5-lot trade, you're making $2,500 on that trade. It's taken you approximately 15 minutes. If that was enough for you, that's your lifestyle right there. I'm going to pack up my desk. I've made my $2,500 today, and I'm going to enjoy my day. I'm going to enjoy the sunshine. You take the grandkids out. I am finished. But you had to wait for that trade. You didn't just come to you at the time. But waiting for the right trade and then executing is perhaps where the challenge is. What happens if it doesn't appear? Do you force a trade in because you're packing up, or do you just pack up today not having had any trades? Fair enough if that's the case. That indeed is the case, right? The one thing you don't do is you don't do the rubbishy trades. You don't do the crappy trades where the lifestyle value is not there. You're just forcing it for the sake of doing a trade because you're worried about not doing any business. Trying to find the easy stuff should not be that hard, because you should be benchmarking all of these easy stories. And there has been some nice easy stories today. The bond this morning has been an easy story. I've mentioned it many times, and in fact we've actually had a big rip on bonds. I hope you've been joining in with me on this trade. We have mentioned it many times so far today, and I have referred back to it on several occasions. Most recently a few hours ago when we talked about gold bonds. I've been working on the long side, building a discount to the 2s, 10s, which is a very welcome trade. We've been building into that, and now we've just had a very, very successful rip on the bonds, coming back up into the 16s again right here for a nice easy money profit take for bond longs. Now, why was that easy? It's taken all morning, but why was it easy? Well, because we've got a very rare thing, in fact, as a bond trader. We have a sizable discount to the 2s, 10s duration. So when I've got a sizable discount, what does that mean? Well, if you look at the 2s, 10s, the blue line, the highest high on the blue line was just here. Well, if I mark off where that is on bond prices, it's this red line here. You'll see that the blue line doesn't go any higher than it was here, which means anything below this price area here, anything below that red line is now what I would determine to be a discount to duration against the 2s, 10s curve. Doesn't happen very often, but what I have mentioned on many occasions to the bond traders is when it does happen, we must snap up pretty much everything we can get our hands on. because it is a rarity. It is something quite rare. So when I see that discount to duration, I want to snap up as many bonds at as many key levels as I possibly can do, and it's just been glorious. The bottom edge here at 20s traded all the way back up to 0.5s or nearly $500 per swing, and there was 3 of them. That's nearly $1,500 of profits in that crappy little phase. And then we get another few $100 there, another $500 there, and obviously the final swing away from the 28s trading a high price of 16s. That's another over $500 trade. 5, 10, 15, 20, $2,500 per contract since this buy trade at 9 o'clock this morning. The buy trade earlier, the sell trade back into this. Last night, you'll be remembering if you read the tweets that we were selling the highs. Why? We'll take a look at that blue line again. The lowest low in the 2s, 10s was here. The lowest low in the 2s, 10s was there. That price is this red line actually right here. You'll see that. And as a result, when the price retests that, you see the blue line is nowhere near that price. The blue line's way, way up here. So that's got to be a massive premium to duration on the 2s, 10s. The thing that I said is actually quite rare. It seems to be less rare than one would have imagined it to be, but here we go. Time to get short. And obviously from that sell trade, we mopped up all the sells we could. 940 before the cash market went into electronic. And obviously the sell-off was pretty easy, pretty glorious. And then the bottom edge just is one of those trades that you dream of as a bond trader. Very, very simple business. All we had to do was get the discount, grab up as much volume, didn't expect to see as much opportunity to buy into the bottom edge as we did. And what a sensation. What a sensation. Crazy good trade, massive outcomes, huge, huge profits. And that's all she wrote, guys. That's all she wrote. When we talk about great trades, of course, one of the great trades that is very, very visible for most of you guys is the crack spread skew. And obviously this is one of them right here. You can see how good this crack spread skew is here with a big volume in the background. You can see that we've had a big surge here, and then we got big volume again coming in here as we made landfall into that very, 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 very obvious crack spread skew trade. Perfect example of what a sell trade should look like, and a very, very good execution. When it flips over here with big volume, it's time for me to walk away, and it turns out that our walkaway trade was the bottom tick price, surprisingly enough. Well, not really surprising, is it? We would expect to see that as the bottom tick price because it's almost good enough to be a buy trade. So again, picking off the best of the best, not compromising on the quality, simply waiting for the right stuff. Knowing what the right stuff looks like is obviously part of your educational part of your trading, is to make sure you can recognize what a great trade really looks like and feels like. That's all part of that benchmarking process that we've spent so many hours doing, that if you still don't know what a great trade looks like, guys, I'm at a loss, because that's exactly what you should have been doing for the last few months, is trying to recognize what those Hall of Fame benchmarks look like. If your Hall of Fame benchmark wall is empty, what the hell have you been doing with your time? Twiddling thumbs, losing money, etc., etc. Well, it's time you started to really think about the benchmark process. It's time you really started to get your head around the idea of what a great trade really, really does look like and feel like, so that when they happen, you're simply not left stranded on the sidelines twiddling. You're actually involved and you're making some great cash. Some great cash opportunities. So welcome in, guys. I hope you're all good this morning. There was a couple of benchmark opportunities. Our equities was interesting because obviously one of the key levels that we gave out last night on equities was this big 94 wholesale price at the top edge. And we've traded to the 94 a few times. We got a very, very nice sell away from the 94s earlier on today. We came back to the 94s again, and we sold away, but the buyers poured into this. So obviously now you're thinking, okay, this is quite interesting because they're now accepting the 94s here. And as they accept the 94s in these areas, you start thinking about the possibility that we might just be going into one of these smaller top right brackets before we might start trying to launch an attack against the big 45 handle on the futures, which is not that far away right there. There's the 45 handle in the futures. It's not that far away. And obviously, if we start seeing that the 45 handle on the SPX starts to become a very voluminous call level at the cash open, perhaps a big unwind of puts perhaps as well. That might be something that happens if we can hold above 45 handle on the SPX, a big unwind of puts at that stage. Then of course that could project the price up very, very aggressively today. So let's see what happens with this one. In terms of data, there is nothing to write home about. The data this morning was CPI numbers, European CPI numbers coming in disappointing slightly, but only just 7.4% against 7.5%. So I think anybody's going to be too disappointed with that number. This afternoon we do have US numbers. 10 minutes time, we've got the Philly Fed manufacturing coming out, slightly softer than expected. Unemployment claims also coming out, 177,000 against 185, slightly better than prior. This afternoon we do have some numbers. We've got the Conference Board's leading index due out at 3 o'clock this afternoon. We also have Powell speaking, with Bailey speaking and Lagarde speaking all this afternoon. And that's all very, very important speakers this afternoon. So the market probably driven by comments from the three key central bank governors. Powell, Bailey and Lagarde all speaking at some stage this afternoon from 4 p.m. London onwards. So be very, very mindful of those comments. Could be market moving, especially for things like bonds. So be very, very cautious this afternoon against those comments, guys. In terms of the bonds, you might be wondering why we got a massive lift in bond prices last night. Well, the 20-year bond auction will tell you all you need to know about that massive lift. I was saying that Sammy's bond auction indicator would have exploded last night with the greenness of it. It had a massive bid to cover. It had some fantastic takedown by indirects, and the dealers were left with absolutely sweet hee-haw, which is always brilliant news for any bond auction. So a massive, massive uptake on the 20-year, working in about 40 basis points higher than it was last month. And that obviously is bringing in a huge amount of money, obviously, compared to the 50 basis point Fed. They're already getting 40 basis points better off on that 20-year auction, and that's great news considering we are still a few weeks ahead of the Fed itself. So that's still to be priced up. But anyway, that's one of the reasons why we've been very keen on bonds this morning. A very, very strong auction from similar levels yesterday, and we've been able to mop up any type of selling at those low prices, make a lot of cash. So I haven't seen anybody mentioning bonds this morning. So as far as I'm aware, it's me, myself, and I this morning on Treasuries. So roll it on. We've just had a big winner trade there, $1,000 to the upside, and I am happy with my bonds this morning, very happy. So I'm surprised we haven't had more bonds made mention of this morning, because it really has been a very, very, very good market today. Outstanding, in fact. So slightly disappointed we don't have more bond traders taking full advantage of the huge profits that bonds have given us today. So welcome in, guys. Hope you're all good this morning. We'll get ready to rock and roll this afternoon. In the meantime, I am going to be grabbing a little bit of lunch. I shall be back in